What up, old Uncle 2? Back with you once again for another weekly outlook. All right, so this week we continue indecision, but we're going to go ahead and get into what we might be able to expect for the following week on Bitcoin, the S&P 500, and we're even going to check out silver and gold. We haven't done that for a while. Okay, diving right in to Bitcoin. So as we have been expecting from the current low at this level, we've been expecting this to be an impulse. And I think I'll address an idea that one of our members keeps floating, and I don't love, and I'll just address it quickly. So something to talk about in all this confusion is that he has identified this as a three-wave move, which I think that would be, there is a world in which that could be the case. What would have to happen? This would have to be zigzag to this level, and then you would have to take this seemingly five-wave move with no overlap, despite being a little bit ugly, is not an impulsive wave. And then you would have like a multiple to that degree, or some other, you could even set up for a flat at that, there's a lot of doors that open at that point. His particular one is that there's a triangle, that this has all been a triangle out to this level. It would be A, B, C, D, E. And, I always like to say that I'm not qualified to do triangles, so I don't even try generally in a play. And it's true, I'm not. But I typically do that a little bit tongue-in-cheek because if I'm not qualified, who is, right? And I know that's arrogant, but I do suck at them. We used to work with a guy, Dave, that was pretty good at triangles, but I suck at them, and I think everyone else does too. So putting your eggs in the basket of a triangle in play, never usually my favorite thing to do. One thing to note is that we don't, there's typical wave relationships that you'd like to see within a triangle. And, when you get into these sort of funky type of patterns, when you get sort of outside of certain things and standard depth, getting a shallow B wave in this instance, we don't even get to the 618. Typically we would get down to like the 786 would be your most probable relationship in this pullback here. We do barely meet what I would say is the minimum guideline of about 55% to even like think that it could possibly be a triangle. Okay, so we have a five-wave move that would start off the A. Then we have a retracement here that doesn't even barely make spec. Okay, so you're starting to stack up in probabilities. But if you want to write your checkbook on that one, go for it. Okay. Anyway, in addition, one last thing. If this was a triangle and you did break to the outside of the triangle, you'd never expect to return back to the triangle. So, okay, we'll see. Anyway, if it's not a triangle, and I don't think that it is, and what are the possibilities? There's quite a few. Counting this in here at this point is just, to me, it's a bit unproductive. But what we do see is that we can, we're anchoring a bit on that this is probably a five-wave move, meaning that it would be a 1 or an A, meaning that all of this mess, which is looking very corrective, is corrective, meaning at this point we are completing a 2/B. Expectation is more that it would be a wave B before we go make another high and then a final actionary low to end this, let's call it bear market. So if we go ahead and pull here off the length of this proposed five-wave move, 1/A, we can see that we have reacted strongly at the 618, right in the golden corner pocket, the Fibonacci golden ratio. This is a, typical expectation, things that we're looking to see. If we draw a pitchfork from the high here to the low here, and we switch to inside, this is a method that former partner Monty, still member and friend, and I have been working on for a few years, where you draw an inside pitchfork on a motive structure off a low, capture the corrective when the median shows importance, breaking above this line and retesting is the sort of your last, let's say if you were late, last entry point potential before an extended move to the upside, whether it be, this would be a C or a 3. Anyhow, we can see that is looking nice. And then we can, in addition, we can draw another pitchfork from this set of pivots here and just check this, go to original. Okay, so we have broken out of the pitchfork, come back down, tested the high of that fork, reaction, very nice. Okay, and then another one here, reaction at the median. What did we say about a reaction like that on a Andrew's pitchfork? It's a bullish signal. It's a long signal. Okay, so we have these sort of geometric confluences and Fibonacci confluences stacking up that this could be a decent low position, but we don't have any sort of confidence in this as far as account. If anything, honestly, it feels unresolved. As we just did this 1, 2, 3, 4, 5. This is not a motive wave, right? Because this doesn't even make a new low relative to this, so there's no diagonal chances. Even if we were to put it in line, there's no these aren't done by wicks. So it feels a bit unresolved to this degree. So who knows what's going to come next, just like we've been seeing with the S&P here for weeks now, where it's just continuing on in uncertainty. And I think that there's a chance for that now. However, I do like this as a low to hold up for a while. Maybe it's just a test of this fork, but if we do, basically, we're going to be looking, from my perspective, to sort of, okay, we're finally going to be on our way, as if we break out of this downward facing pitch. And that's where we're at with Bitcoin. So hopefully you guys hung with me this week. This is not much Elliott wave because, well, it's a bit confusing from an Elliott wave standpoint. What we do see here, just checking divergences. Let me get out here to the 4-hour. Yeah, no divergence. Yeah, just, nothing looking nothing looking resolved at all at this degree. And like I remember with the triangle idea, that would be my favorite. That would be my favorite count. I wish that would be like I told you guys last week, just let's go rip the Band-Aid off, get this low and get back moving to the upside. But I don't think that's going to happen this week. All right, boys, let's move over to the S&P. All right, let's get into the S&P. And just like Bitcoin, we've got a lot of confusion here and continuing pain to the just sideways range-bound price action. But however, this one, we got a little bit better beat on the internal structure. At least we've been paying attention to it a little closer than the Bitcoin, where, I'm not really interested in digging out that B wave. This one, if it were this large, we'd have to do a little bit more digging in. So as of what we discussed last week, if you want to sort of catch up to where we are with this price action and then this move to the downside, where we were last week was at this low. And I was predicting at that point that we would finish an impulsive move to the downside, which we have done, correct to the upside, and one more impulsive move to the downside before hopefully finishing this torturous sideways price action. So as we can see, again, this is a perfect impulsive move to the downside. The move up here does seem a bit three-wave. However, there's a little bit more, it's just like Bitcoin, there's a little bit more indecision on this potential 2/B. We do see a perfect reaction at the 618, the perfect corrective area for a 2/B of this impulsive move to the downside to set us up for this zigzag. Let me do that and that so that we would match the proper degrees. Again, however, we see that this is the way that this is looking is it could very well flush out with a sort of a WXY to the upside, give us a little bit more extra indecision and pain before we come down and make that low. That'd be very fitting. And there's a little bit of, by the way, sort of macro sentiment, liquidity things to talk about. We'll touch on that at the very end just a little bit because I know no one cares about it. Anyway, yeah, this is sort of, I personally, let's say until we come up and form some sort of impulsive move to the upside out of this consolidation, I would say that this is my leading candidate. I'm not looking to take any shorts on this, but again, me, I'm a guy that likes to go long. I could very well be interested in a long move out of this potential Y. But, just because it's a nice low range test, things like that. But we're obviously going to have to look for divergences and all of those things at the lows that really need to stand out. In the meantime, we're just going to wait and see. We'll follow this the rest of the week within the Discord. All right, let's jump over to gold and silver. Okay, gold and silver. I don't remember where I left you guys off the last time we talked about this, but I believe that essentially I told you the expectation would be to put in some sort of a sideways style move before finishing a larger corrective with a bigger actionary move to the upside afterwards. And so far, if that's where I left you off, I know that that's where we left the members off. Right on key. We're going very well. We can see that we had a strong move to the downside, and that we're having sort of a very, very standard B-looking wave to the upside for a sideways move. Why would you think that, Toot? Why would you say that should be, why would you say that should be the expectation? Well, let's just say that I followed the theory for a long time, and this is about standard operating procedure. Someone sent me, I can't remember where it was. It might have been on Twitter. Someone sent me a research paper from someone saying that, sideways moves aren't are less common in wave fours than sharps. And, I don't think I agree with that, but that's not even the tact that I think you should take when you're considering it, right? We should be thinking about alternating moves, right? And we see a sharp corrective to here, and it does overlap. And if you want to get into all of this, you can. But then also, what do we see when a sharp wave or a sideways move is developing, right? We see that we get a very sharp first actionary leg of that sideways corrective. Then we get a very, let's say, typically less steep reactionary wave that challenges the start of that first actionary wave, right? So that reactionary wave, and then you get the final actionary wave. So let's just say that there's a lot of things that you can look for, and if you know what you're doing, you don't need to think, well, normally, just let the chart tell you what it's doing, So anyway, I think that we are putting in a very standard looking B wave to the upside, BX. Not sure which one it would be yet, but typically you would say B first, that it would play out something like this. And then this is going to be a very scary move to the downside. Everyone's going to say, I'm out of gold. And then, gold's going to do what gold does. So that's gold. Silver, same. Nothing on the lower degree other than, in the near term, we look quite bullish, right? So it appears that at least on silver, we could be in the third of the third, potentially, to continue to break out to the upside here, or third of the C, I should have said. So maybe we're going to do something like, let's just do out our projections. Remember that little trick I told you guys about a week or two ago? Wave 4 of 1 lesser degree. It's a beautiful trick. Okay, so, but then if we do this, that's not enough to give us a sideways. It doesn't have to be. It doesn't have to be sideways, but possibly. I wonder if this is going to end up giving us something like this. Maybe this is going to give us maybe silver will give us something like this. And we'll still get our 3, 3, 5. I would say right now that maybe something like that would be my primary expectation. Where do we start to shift in this idea? Well, if this starts to turn into wave 3 relationships, which it doesn't appear that it wants to thus far, maybe this turns around. Let's clean this up so you guys can look. So maybe if this were to come down, find a support, and then move to the upside like a 3 of a 3, that this would be getting impulsive. We'll turn our around our expectations at that point. But right now, this looks like at the moment it's going to be an area of concern right around the top of this channel, right around the 1-to-1 of this move, standard wave C stuff. So we're looking for a C to this upside, but I would think at that point, my primary expectation is typically, you know, it's not. I always think it's funny when people project for X's early, but in this particular instance, because of all of the circumstances that I sort of alluded to on the gold chart of this, let's just say, not being quite adequate in time, we need more time. So I'm going to expect that this will be the first actionary leg of a more complex multiple zigzag to this upside. But in the near term X, I don't know, how long does this take out? A couple months. Bullish still, even though currently bullish, we'll get an X in there, but should be a nice little continued sideways, painful. Silver's a little bit, silver and gold are a little bit, let's say, behind where the S&P is as far as it's been in its sideways painfulness, right? So somewhere in this juncture when we're getting weakness in here, weakness here, I expect S&P probably shows some strength. So we'll see how that goes. Now, one last thing that I want to touch on before we get off of the video is that there's been a bit of a, let's say, private credit FUD. We are seeing a bit of stress in those markets, very minor, right? So a little bit of a flight to potential safety, DXY spike, TNX yields down. Just a little bit of, let's just say, ripples in the water. Nothing to be concerned about at this point, but it's something that we're tracking, because if that develops into something more, we could have a risk-off environment, sort of a panic. So we want to. I don't think that that's on the horizon. In fact, I think that that is just enough FUD to get us to the area where the S&P can really start to finally go up, and maybe even Bitcoin, because typically when everyone starts to believe that the opposite, something that believe in one thing, then that's exactly the moment that the opposite will happen. So, a little bit of FUD here might not be the worst thing for us. All right, boys, 2 out.